Welcome to Trading Lounge and the gold and silver report for the 20th of January. We'll start with silver and then we'll have a look at gold. They're pretty much on the same pathways. So let's go in and take a closer look. So while obviously the correction here is getting rather complicated, our best shot at this is with an A wave here, an A and a B and a C wave for the B wave here, and then the move down here can come down in three waves. So it can come down as an A and a B and a C wave here, or we can be looking at this C wave here being wave 3 here, then wave 4 and then wave 5. So it can come down in two different ways here. So today we don't need to worry about that today. We can also just focus in on this little area in here. Okay, so we'll move in and do that. I think I'll just take a shortcut and cut through to perhaps the hourly chart here will do the trick. Just cut a long story short. So from the top here we're looking down as 1 and 2 and 3 and 4 here, and then down for wave 5. It could be wave A or wave 1 here. Then we're looking for, well, we spoke last time, I think we were looking for a low to come in here, I can't recall. But anyway, that wave 5 to come in, and then looking for an A and a B and a C wave to the upside here. From that high to that low, the 50 and 60% retracement level is here, so 2,600 to 2,650, and then we'll be seeing the market move lower from that point. I don't think the tick chart can really help us anymore with this, but we'll just have a closer look. Not really. We've got nice 5 waves down here for the wave 5 of 1 or A here. And then I was thinking of this as 1 and 2 and 3 and 4 and 5 moving up here a little bit higher. A little bit unsure about that. The wave 3 looks a little bit short there, but normally what I find is the markets will come back up to the previous high and then get sort of pushed back down and then have another push up and then exhaust itself at that point. I can say though too that this 50-60% retracement level area here, if we start to get support in group 2 here, which is 65, 72 and 80 here, if we get support in here, or even starting in this if we get support on top of the 61.8% mark, which is the 2650 area, then we'll look to be bullish at that point, and we've made a mistake at that point. But otherwise we're looking for a rally to into the box, and then we drop that point. We've got this low in place here. Once we've got wave B low in here, then we can draw the line through here and we can short from that point. So we're not quite halfway up to that rally point just yet. Okay, so that's sort of where we are with this market. I'll just put this back into say the hourly chart here. Not a big deal, but there we go. And now we want to have a look at AU gold. So just on the daily chart here. So the same thing applies here as well we looked at last week. A couple of things here where, well, let's just take it from wave B here. So we can come down as an A and a B and a C wave here and finish here on this low and then move up from here, or we can look at having 5 waves down. So we just need to be a bit careful after this A, B and C wave here. In the other count it would be wave 1, 2 and 3, so they'll both have the same low. So we'll just need to be a little bit careful when we see the rise here. We'll have to work out if it's impulsive or corrective. Now there is a count on our website as well, which puts all of this into a triangle pattern. I'm not going to go into that here because it's on the site, so we need to take that in consideration as well. So let's sort of move in here and pick it up, this move down through here and the corrective rally that we're looking at. So from the daily chart, go to the 4-hour chart, I think. So yeah, we're looking at it, not much of a not much of a change from last time we spoke. We were looking for one more low to be broken here, so that's come into play. We're looking for a bounce off the 1800, so we're getting that bounce there. We don't need that, don't need that, don't need that. So yeah, we're just looking for that corrective bounce there. So we'll look at that in a bit of detail, just checking that that's okay for the time being in this space. So yeah, an A wave, a B wave, and a C wave. So I'll just move that to there. We can put that wave 2 on top here. So we're in the first leg here. That'd be safe to assume, wouldn't it? So the first leg, the second leg, and the third leg to come into play here. So probably we'll just sharpen this up a little bit here. We don't need that. So we'll be looking for a move up, and then a 3-wave move back. That will move back 50 or 60%. So we don't need these guys here for a moment. And then we'll be looking for 5 waves up here. Okay, 1, 2, 3. Look, it may go to the 61.8%. It may go to the 50%. It may just go above these highs here and struggle at that point, or even level with those highs and then drop from that point too. So there's a lot that we need to be aware of, and also too we can draw a line through there once we've got that low. Well, we have got that low in place, beg your pardon, and this second low here, the B wave here, we need that in, and then we can look to short at that point. So when we go into the intraday, I've got the same count, but I've got it. I've got this 1 degree smaller in blue here, so I haven't updated that part of it. So just bear with me on that. So I've got the B wave here, which is fine. These all should be 1 degree higher at that point, but it doesn't really matter that much at this stage. Wave 1 and 2 here, and 3 here. This could be counted differently here in different ways, but that's okay. We've still got that low coming into play, which is the important point here. And we're looking for the A wave, the B wave, and the C wave up here. So it is struggling a lot. It's kind of interesting when we have a look at the GDX as well. Let me just bring the GDX up. So this is GDX. We looked at this before this sort of, well, I don't know if it had broken, how far it had come down here, but my main point with this is a daily chart for GDX. My main point here was that this move here had overlapping wave structures within the center here. So it had 5 waves in this first little move, which is cool, and then this one and this one and this one. So we've got overlapping wave structures here. So I knew that straight away it was corrective, and we would be making a new low here. So it'll be interesting to see how this plays out, because technically this one here has got also 1, 2, 3, 4, 5 here. So in a bit of a nutshell, we should see 5 waves play out like this here, and of course the major level here will be 30 here, so that's where GDX can come down to for this. So just be a little bit mindful of that, and because this is a ETF, it will probably come down in 5 waves here. So it's not really updated as such, but yeah, anyway, I just wanted to show that for a point there. So this could be wave 1 here and wave 2 at this point. I'll just move into the tick chart, not that it can tell us much more, but we'll just have a look at that anyway. I'll just bring in a bit more data here for this, so just for a little bit of detail here. So wave 1 is clear, 2 is clear. We've already been through all of wave 3 here, so that was clear. We're looking for 38.2% retracement level. We've got that. Like I said, this could be counted in different ways here. So I could count this as an A wave here, then an A wave here, then an A, B, C for the B wave, and down for the C wave for the B wave, and then C wave for the B wave, and then the C wave here. and then look at this here as 1 and 2 and 3 and 4 and 5 for wave 1, and back for wave 2 here, then down for wave 3 here, because we've got 5 waves here, and 4 and 5. So it could be counted differently. You could put wave 4 over here too, that works as well. So look, hey, it doesn't matter, we've got that low in place, and that's what we're looking for. And now we need to be looking at this. I haven't really studied this here too much, so it'll be, I mean, if this is wave 1 here, going back for wave 2 here, then it should be a zigzag, and that means that would have 5 waves in the first structure, and then we'd have 3 here, and then we'd have another 5 here. If that was going to be wave 1 and wave 2, we don't have a wave 2 there, but we'll just copy that and put 1 in. Because between wave 1 and 2 is a zigzag, it's a 5-3-5 structure. But if it's going to be a wave B, it can get as complicated as hell. So we'll just be open-minded at this stage, and this is a little bit tricky to work out. I could probably go in there and fish it out, but it's still early days. In one way or another, we're still in this first leg. So as a B wave, it could get very complicated. As a wave 2, it'll be very simple. So we'll just give it a bit more time to mature, and that's the thing with corrections. Once you know that you're in it, we're in a corrective rally, we know that we're in it. If you allow them to mature, then you've got a much better idea of them. If you make moves too early in the piece, you have to leave really wide stops, and that's where you can make mistakes with corrections, getting in too early, and you're getting into the guessing game, and then you're exposing yourself, which you don't want to do. Alrighty, I've waffled on long enough. Not much of a change, and there probably won't be much change. The next video is on Friday, so we'll see where we are. Hopefully we've got a very clear corrective move here, and we've got our nice 5 waves up into this structure as well, and we can perhaps look for short at that point. Alrighty, thanks for tuning in.